Investors are always trying to find a deal. They're trying to find something on sale. Assets become cheap, and then investors see it as a deal. They swoop in, they buy it up, and the price rises. Well, this is what's happening with China today. Investors are watching very closely to see when all of the waves have gone away and when it's time to pounce. I'm going to show you this today. Number one, chips and China. No, I'm not talking about Lay's. I'm not talking about Miss Vicky's. We're looking at semiconductors. That's the first thing. The second thing is Alibaba and other tech companies. This is really key because that was the first thing, really the first thing that hit hard for China and other investors when you see it and what they've, where the money has gone and left from. Number three is being real estate. I've shown you Evergrande. We talked about that, and now it's basically disappeared off the face of the earth. I'm going to give you some information related to that and what it really signals for investors today, but it's important even if you aren't investing in China or any other of these countries outside of your own. Look very carefully because it tells you what's happening with the economy. Let's get into it right away. This was a month ago. China readying $143 billion package for its chip firms in face of US curbs. So what happened here was that the US said, what can we do to squeeze China? Well, one of those things is that if we limit their access to technology, then they're going to have a hard time expanding and growing. This is the thing that people don't understand. It's so important. Control the semiconductors and you control a country. And that's what they're trying to do. They said, the US said, we are going to put the squeeze on China. They've been doing that. And this has been quite painful in this regard. So China's trying to figure out, trying to say, what do we got to do here? And this is really, when you think about it, it's kind of like an act of war because they're saying, hey, suddenly we can't access this technology. This is incredible. I don't know if they've ever done this before, but it's certainly going to be painful for China long term if it continues. Now, fast forward, they're saying this, look, instead of doing that whole, trying to just throw money at this, they're seeking alternative ways to assist homegrown chip makers, such as lowering the cost of semiconductor materials, just like you would do with public works, right? Oh, if people aren't buying homes, let's just build the homes anyway, and then eventually somebody moves in. This would mark a shift in Beijing's approach toward an industry regarded as crucial to challenging American dominance and safeguarding Chinese economic and military competitiveness. It underscores how the country's economic ructions are taxing Beijing's resources and hobbling its chip ambitions. This is a top priority. It could have ramifications for spending in other critical areas, from the environment to defense. They can only spend so much money, but chips, they need to put money into. Watch what happens with the chip stocks. Watch what happens along with that, when basically the geopolitical tensions in between these two countries, and you could see if these start to move away or they figure something out, I believe it is positive for the stocks as well as the economy. This is just showing you that China hits pause on the giant chip spending aimed at rivaling the US. This is what's happening today. All the media is reporting on it, and you've got to know this because if we go into this part of the cycle and it gets real tight at some point, well then, what's happening with China? They can't grow. They just can't grow. If China can't grow, you got a problem in the rest of the world. That's the key, okay? Let me show you the next aspect. Alibaba and other China ADRs, basically looking at stocks, Chinese stocks, but listed on US exchanges, surge as Ant Group capital plan approval fuels hope for relaxing scrutiny. So US listed shares of Alibaba jumped more than 12% following the news. So what's going on here? Well, you had, this was the first one. This was the big one, where Jack Ma said a few things about the government. I didn't even think it was really that bad. And then the guy disappeared off the face of the earth. Okay, now he's in Japan painting, apparently. Really. Okay, anyway, well, at least that's what they say. So in this example here, it's just showing us that things can get real serious real quickly. Chinese tech stocks have been beaten down for more than 2 years, largely on the back of regulatory pressures from both Beijing and Washington, in addition to the impact of what happened during 2020 with the lockdowns on economic growth. China's tech crackdown began in earnest in late 2020 when regulators quashed Ant's plan to go public. In a landmark IPO, this is basically Ant is owned by Alibaba, and you could see what happened. This is Alibaba stock. Down, 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 down. There's like these little boosts that happen along the way, but ultimately it just kept falling. And so they believe that, hey, now they're loosening up. That's positive. And of course, if that is the case, that they actually are loosening, it's not just a head fake, very positive, very positive. Lockdowns, the real estate industry, and what happens with the tech stocks are the three things you need to know. If you take only one thing from this video, those are the three. You watch those three, you got it, okay? This is just showing us more detail. In November 2020, the Chinese government quashed Ma's plan to take Ant public. The next spring, it fined Alibaba a record $2.8 billion for monopolistic behaviors. It later ordered a security review of ride-hailing giant Didi after its US-based IPO that culminated last year in a $1.2 billion fine, talking about video games and so on. So you could see what happens to the stocks. Not too good, right? There's revenue growth specifically. This is what happens. They hit them hard. They hit them real hard, saying you are going to have common prosperity or you're not going to have a company. They were willing, China was willing to squash their biggest companies in order to make sure they exert their dominance. I want you to think about that for a second. What are they willing to do? They're willing to lock down the entire country for basically 3 years to exert their dominance, to say this is the way it goes, these are the rules, if you don't follow them, you're in big trouble. That's what they're saying. They're making it very clear, okay? Let's look further at this. Ant gets approval to expand its consumer finance business. Very important for the tech industry, very important for China as well. Same situation, just looking at that from all of these different corporations. Pay attention to what happens in the tech industry. Look at the beatdown that these Chinese tech stocks, right? They're like the equivalent of like the NASDAQ, think about it like that. Peaking out, massive, like this huge surge in 2020. And in early 2021, it just kept falling and falling and falling and falling. Now, maybe the point a couple months ago was the bottom. And so we can see what happens here in the next little while. It's been rising. It's been rising for a couple months. So we'll see where it goes from here. China risks loom over US tech giants, Tesla and Apple, as share prices plunge. So of course, there's a contagion effect. So watch that closely. That's all I wanted to say. Optimism over liquidity support for struggling real estate developers is also buoying Chinese ADRs. So when you see what goes on with the real estate industry, that has an impact on stocks. And of course, if some of the stocks start doing well, then that kind of makes the others do well as well, because it pulls up the indexes and so on. So let's pay attention to that real closely. Okay, I'll follow along with all of that. So you keep an eye on this channel. As China reduces lockdown measures and lessens scrutiny on the tech sector, it will have a positive impact on the economy and the stock market for a number of reasons. First, reducing lockdown measures could allow businesses to resume operations more fully, leading to increased economic activity and potentially boosting economic growth. This would be most notable within the manufacturing sector and transportation as well. Second, reducing scrutiny on the tech sector could allow tech companies to operate more freely, potentially leading to increased innovation and expansion. This could also lead to an increased investment in tech stocks, which would drive stock prices higher. However, it is important to note that the overall impact on the economy and the stock market would depend on a variety of factors. At this time, investors have been waiting for these factors to occur to jump in. So that's what's going on. They're paying attention. I hope you are as well. If you're an investor, keep a close eye. Definitely, I would say, on what's going on with Alibaba and all these other companies. It seems like things are really changing quickly. Now, the real estate market for China has been wild. Look at what happened with Evergrande. There are 65 million empty homes in China today. Very odd to see how much building there still is, but that's the way it goes. They got to keep it going because they have massive public works projects beyond anything we've ever seen in history. Look at this. China developer forced to sack 90% of workers in bid to survive. For years, betting big was the route to success for entrepreneurs. The main aim for many now is just to stay in business. Things are changing. Real estate industry is just one aspect of that, but you can't just grow forever. As soon as they start locking down, China really turned around, and the economy has not been as strong as they had hoped. This is good news, and we can suggest that this is all part of the fact that they need cheaper energy. They can't, just have these, battles with other countries. China discussing easing of ban on Australia coal imports. This is also very good when we look at what happens with the exports of Australia. They need this. This is important for them, and if they can continue to export more, that is good for their economy overall. And then the last thing is that for the first time in 40 years, this is from the IMF, by the way, for the first time in 40 years, China's growth in 2022 is likely to be at or below global growth. Before 2020, China would deliver 40% of global growth. It's not doing that anymore. Not doing it. So when I talk to Asian leaders, all of them ask the question, what is going to happen with China? Is China going to return to a higher level of growth? And that's the key here today, and we need to pay attention to this. For so many people, they don't realize this. China is the engine of the entire world. Yes, of course, the American consumer important and all that, but you look at what China does. The appetite, the absolute appetite for just about everything is beyond any other country. They're buying more cell phones, they're buying more cars, they're buying more computers, they're buying more of everything. And if the economy is slowing down, they're locked down, tech sector scrutiny, all these different things. Real estate, they're not building as much real estate. We don't need concrete now. We don't need copper now. We don't need cement. All these things. That affects all the other countries that are providing stuff to them. So I hope you appreciate this information here in this. You got to look at those 3 things I was talking about today. Those 3 are key. I hope you appreciate it. If you did, simply hit that subscribe. Every single day, I'm going to bring information to you that you need to know. This is really important. I hope you will join me tomorrow. I'll see you then. Take care.